Hello, my name is Aziz, a fellow of the Association of Chartered Certified Accountants. Welcome to part 7A of the course, Bookkeeping up to Final Accounts. Today, I'm going to talk about month-end activities. That is what you have to do at the end of every month as an accountant. And month-end reports. Reports that you have to produce at the end of every month before you close the system down and then get yourself ready for the following month. So, now there are a lot of things that you need to do at the end of every month, which I'm now going to talk about. They are called month-end activities. First of all, you have to reconcile your nominal ledger. Make sure that everything in the nominal ledger makes sense. Review the nominal ledger. Now, I will begin like this. First of all, update your cash book. Once you've received your bank statement from the bank, and that should happen daily, actually. Now, ideally, that should happen because in these days of electronic activities, you'll be able to download your bank statement from your bank's website. Now, make sure that your cash book is up to date to start with. Then you can carry out your bank reconciliation. Then you reconcile your sales ledger to the nominal ledger and then produce what they call age debtors analysis, which we will carry out later, and I will show you. Reconcile your purchase ledger to the nominal ledger and produce age creditors analysis. Now, age creditors analysis, just like age debtors analysis, shows the age of each. It shows you how long each invoice has been outstanding. Now, please, as soon as you produce your age creditors analysis, get the summary of that analysis as well as the details. The summary will show you how much is outstanding on each supplier's account, and the details will show you the detailed invoices that are outstanding. Look at the detailed invoices on each supplier's account. Get your file of supplier's bank statement. Ideally, you should have a file in your office where you keep supplier's bank statement. The latest copy. Make sure that the contents of the latest bank statement, latest statement from your suppliers, agree with the content of each supplier's account. If that is not the case, then there's a problem which you need to take up with your supplier. Anyway, we'll come back to that later. Reconcile your fixed assets register to the nominal ledger. Make sure that your fixed assets agree with the content of your nominal ledger. Prepare your cash flow forecast. Review your nominal ledger, like I said before. Go through your nominal ledger, make sure that every transaction there is valid and verifiable. In addition to a lot of other things like stock counts, which I've already mentioned, reconciliation of credit card accounts, which I think I've already mentioned. And then, having done all those things and having satisfied yourself that everything is okay and you are ready to prepare your final account, the next thing you need to do is to export to Excel the contents of your accounting package or accounting software. Download everything to Excel. Having done that, save it somewhere where it can be accessed in the case of anything could happen. Your licensing agreement with your software provider could end so that you have something to fall back on. And your auditors may need to see them. You may even have a tax visit, VAT visit. And you will not want VAT investors to be opening up your software by themselves. You should have something that you can easily show them on your desktop, like the Excel version of what you already have on your accounting software. Okay. Now, let me begin with bank reconciliation. Now, bank reconciliation goes like this. Okay. Here is the reconciliation statement that I've already prepared. Now, and these are the steps I have taken to prepare this reconciliation. To reconcile my bank account to my cash book. Now, let me first of all tell you why we do bank reconciliation, why we reconcile our bank account to our cash book. The reasons are many, but I'll just give you a few. Bank reconciliation enables us to keep track of our bank accounts, movement on our bank accounts, in order to be up to date with regard to the company's our company's cash situation. Bank reconciliation exposes or prevent theft of theft of cash from the company's bank account or any other kind of fraud. It also helps to detect fake invoicing. Now, fake invoicing, like I've already said, happens when invoices are issued for non-existent transactions that have not taken place. People issue fake invoices. Why do they do it? It is because they want to make a failing department or a product line look more successful than they already are. And this is usually done by accounting staff in collaboration with departmental managers who want to justify their continued employment by the organization. Maybe they are not pulling in the sales that they promised that they'll be pulling in. Their department is not making any money. But they want to be retained, they want to keep their job. So they get accounting staff to help them issue false invoices and send them to supply non-existent customers. So in this sort of arrangement, invoices are issued and then put in the sales ledger. But instead of being posted out, they are destroyed. So after they've been posted in the sales ledger, they'll be waiting to be paid, but they are never going to be paid. So what happens is this. Fake payments are then passed through the cash book and the customer's account. So the fake payment will appear in the customer's account. The cash book will also show the fake receipts from non-existent customers. But they will stay on the cash book forever. And so at the end of every month, when you are doing your bank reconciliation, you will discover that those fake receipts are outstanding items because you can't match them with any item on the bank statement because they will never appear on any bank statement because no money has actually been received from anybody. So, to prepare your bank reconciliation, you have to look at your closing cash book balance, which I have already done. Okay? This is our cash book. Current account mainly, because current account is usually the subject of reconciliation because that's where you have most of your movement. So this is my bank account as at the end of April. The closing balance is £2,094.91. I am now going to compare that closing balance to the bank statement balance of £10,274.40. Okay, that is my current account statement. Now, and with that, I'm now going to prepare my bank reconciliation. As you can see, I have put my closing cash book balance here. Okay, this is a closing cash book balance. So, in order to reconcile the two balances, I am now going to add back all unclear payments. That is, the checks that I've issued from my bank account, which have not appeared on the bank statement. Okay, I am also now going to deduct the receipts that I've shown on my bank in my cash book, which I have recorded in my cash book, but which the bank manager has not credited to the bank account as at the date of my reconciliation. Okay, and then that will give me what they call the calculated bank balance. Okay, then I will compare the calculated bank balance with the actual bank balance as shown on the on the bank statement. The difference between the two are called reconciling items, and they should be explained. I should be able to explain them. Now, this approach, bank reconciliation, in this approach, I've done it in such a way that you always get a zero balance between the calculated bank balance and the actual bank balance. Now, how have I done that? Now, the steps I've taken are these. You can see add back unclear payments. Payments in cash book, not on bank statement. What I've done is I have copied my cash book, all the payments on the payment side, regardless of whether they've appeared or not. I have copied them and put them on this spreadsheet per ledger. Okay, all these payments. These are payments, all the payments in my cash book. I've not even started my reconciliation yet. What I've done is I've copied all my statements. Sorry, all the payments of my cash book. Okay, a total of £44,009. I have copied them and added them to my closing cash book balance. Okay. Now, I have also copied all the receipt of my cash book. Okay. Copied all the receipt of my cash book. Regardless of whether they've appeared on the bank statement or not, I copied them. These are the receipt, a total of £46,136. Okay. I've copied all of them. And then the total I have deducted from my cash book, closing cash book balance. I have also done another thing. I've looked at my current account statement, okay? The current account statement, I have copied all the payments there, okay? I put them here. I've copied all the payments on the current account. On the current account, that is statement of account from the bank, from the electronic copy. I've copied them. Regardless of whether they match what I have in my cash book or not, I have put them here. Okay, I have deducted them from my. I've shown them here as a deduction from the closing cash book balance. Now, I have also copied all the receipts on the same bank statement. That is, all the receipts that the bank manager has credited to the account as money coming in for the company. I've copied all of them regardless of whether they match what is on the bank statement and what is the cash book. I've copied them and added the total to my closing cash book balance. Now, you will see that all of this, the closing cash book balance, plus all the payments from the same cash book, regardless of whether they've appeared on the bank statement or not, minus all the receipts on the same cash book, which are already recorded in the same cash book, regardless of whether they've appeared on the bank statement or not, minus payment on this bank statement. Okay, regardless of regardless of whether or not they've been matched with all the items on the cash book, I have also added the receipt on the same statement to the same, and you will see that all of them added together have given me a total of £10,724.40. You can see, which is exactly the closing balance on the bank statement. And I've not even begun my reconciliation yet. Yeah, you can say that your bank statement has reconciled when the difference between your calculated cash book balance, your calculated bank balance, and actual bank balance. When the difference is zero, then you can say that your bank statement, your bank reconciliation has reconciled. Now, what I've done here, you can see that it's actually zero now. Now, this is called auto-balancing. Auto-balancing, now, which I learned from a very nice, very, very knowledgeable colleague, is very, very useful in a big organization. If you find yourself in a big organization, the simple one that I've explained earlier on, that is opening cash book balance, add payments on clear payments, deduct on clear receipts, calculated bank balance, and then actual bank balance, is very useful in a very simple, low transaction environment. It's useful. But when you find yourself in an environment where you have to deal with huge amount of data, if you use that simple system, you'll get into trouble. Okay? And I was on an assignment when I used this very simple system, and I got myself into trouble until I was rescued by a colleague who gave me this, what they call auto-balancing system. This auto-balancing, believe me, is very, very good. It will help you if you find yourself in a multi-million pound environment. So what you do, having automatically balance this thing, is to now start looking at the item on the bank statement and the item on the cash book one by one. As soon as they match each other, you begin to knock them off. Okay? So I am now going to start doing it. I have looked, this is my cash book ledger. Okay? My cash book. These are the payments, these are the receipts on my cash book. I have highlighted this one, which is £15,000 on the 1st of April. I am now going to look at the bank statement page and look for the same item. Now, this item has appeared on the bank statement I will highlight it like that. So I will delete it from my list on the bank statement page. Okay, I will delete it. I'm going to delete it now, and then go back to my cash book page and delete it. Okay, delete. And as I'm doing it, I am also watching this summary page just to make sure that this difference to be investigated, as you can see, look, difference to be investigated is 0, that this difference remains 0. It doesn't change. So I am balancing that I am reconciling my bank reconciliation as I'm going along. Okay, you do them item by item like that. Again, I'm going back to the cash book page. I've just spotted one item, which is £300. Okay, 10th of April, which is a receipt. I then go to the bank statement page. It is also there. Okay, which means it's reconciled. It has appeared on the bank statement. I take it off. That is, I don't have to worry about that. It's no longer part of my unreconciled item or reconciled item. I take it off here as well. I go back to my summary page and it is still 0. Okay, then I go back again to this one, 3348. What is that? Okay, on 17th of April. That is on the cash book. 3348 is also on the bank statement page. So I take it off. I delete it. I go to the ledger page and then I delete it as well. Okay. Now, £2,000 on 15th of April is a receipt. Yeah, I take it off. Yeah, it's also there here. So I take it off here as well. Okay. Then I take it off here as well. Now, £300, 15th of April, Amos. I'm going to take, go and look for it here. Yeah, it's also there. So I take it off. Right. Okay, take it off. One by one. 15th of April, another £300. I need to go and look at my summary page. Yeah, everything is okay. It is still 0. Okay. Okay. Now, if I highlight that and then go and look for it, so if I can find it here, yeah, it is there. I take it off too. Delete. And then delete. Yeah, £360. Okay, I take it off here. Yeah, it's also there. I take it off. You have to be very careful. Don't just take them off. Don't go by amount alone. You have to look at the details so that, because you may have two or three items of similar amount, you see, so that you don't go and take off the wrong thing and start worrying later. Make sure you take off the right thing, not the wrong thing, okay? Don't just go by the amount. Look at the details as well, okay? Now, transfer £15,000 from deposit account. You go there. Yeah, it's also there. You take it off. Okay. Right. £3,552 receipt on the cash book. Do I have it on the bank statement? Yeah, it is there. So we take it off. Yeah, from the cash book, bank statement page as well as the cash book page. Okay. Next item, 2,880 receipt, 19th of April. Yeah, it's also there. Now, that I can also take off or simply delete. Okay. And then I come here and delete it as well. Now, the only one here which has not appeared, which is on the bank statement, £3,096. Okay. We don't have anything left on the receipt side, which means that has not appeared on the bank statement. It will stay as a reconciling item. Now, when you say that an item has not appeared on the bank statement in 1 month, be very careful here. If it's a receipt, first of all, this amount was posted into the cash book on the 24th of April. We have now reached the end of April and it has not appeared. Then this amount, if it is genuine, must appear in the following month's bank statement at the the first week of the following month. I should be able to look at the bank statement for May 2020 and tell myself that this item cleared maybe on the 6th of May. Yeah, on the 6th of May, and then put it there on my reconciliation sheet to convince people that the item is genuine. Okay? Okay? Yeah? If I can't find it on May's bank reconciliation bank account, then it means this item is probably a product of fake invoicing, which means this income recorded in the cash book, but which has not appeared on any bank statement, is fake. It will never come because the transaction never happened. But let's just say that I've been lucky On this occasion, it is not fake, and I found it on the 6th of May, which means this item, though has not appeared in April, will appear on the 6th of May. I've seen it on May's bank statement. That's good. So we move on to the payment side. Okay? On the payment side, now this is still zero. Okay? On the payment side, I'm looking at payment on the bank account, bank cash book, £500. Yes, is it on the bank statement as a payment? Yes, it has also appeared. Okay? It's £500. So I take it off. Or I can just delete it. Okay? Then I delete it here as well. And make sure that it is still zero. Yeah? So, petty cash, £300. Take it off. On cash book. Yeah. So some bank statement, take it off. £20,000. Take it off. Is it there? You have to check, make sure your checking is from the cash book to the bank statement, not the other way around, yeah? So that you don't get things mixed up. So this £20,000, is it on the bank statement? Yeah, we go and check, it is there, so we can safely remove it. Yeah, it is there. Yeah, and then remove it here as well. Now, 85.25, end of April, that is not there yet. Okay? So we leave it. This £20,000, no, sorry, £1,200. £1,200. Yeah, it's also on the bank statement, so it can be safely removed. Yeah. Or you can just take this one like that. Yeah, okay. 3360. Is it there? Yeah, it is there. It can be removed. And yeah, and we check again. It is zero. Right, 2880. Is it on the bank statement? Then we can find out. Yeah, 2484 on the cash book. Yes. Bank statement. Yes, it's there. Let's take it off. 1560. $3,000. Yeah, it's not there. So the only thing that is left there is just 3160, which is bank charges. Yeah, bank charges 3160. As you can see, there is now nothing left on the bank statement page. We've reconciled all the other items, so there's nothing left. The ones that can't be found on the bank statement page are the items that have not, that they are called reconciling items. They have not appeared on the bank statement. Now, these are payments, okay? As you can see, now, this is the net salary that was paid at the end of April, which the bank manager did not record in our account at the end of April. So it is there as a reconciling item. We also have this £3,000 and then another £200 direct debit, which have not cleared. These are called reconciling items. And again, it will really help to look at the bank statement for the month of May or the following month and then state the date that this item has actually gone through. Okay, now these are known as reconciling item, and as you can see, the balance is still zero, so which means we have finished our reconciliation. Now, I have done this on Excel. In a computerized environment, you should also go into your accounting system and then do it on your system, maybe Sage or it could be Sage, it could be Oracle, it could be Sun accounts. Do it on the system, and then after doing it on the system, hopefully they will have shown you how to do it. Then you need to print a system bank statement. Get the printout of a system bank statement and file it with your Excel one and your list of reconciling items, and everything is okay. That's done with bank reconciliation. So we are happy with that. I am happy. Now, the next thing to now talk about And I want to talk about all the other reports that you need to produce at the end of every month. Okay? So if I just shut this one down. Just 1 second. No, these are no longer needed, so I need to close them down now. Right, okay? There are things you need to produce at the end of every month, and they are here. Age creditors analysis, okay? Actually, you need to also produce day books. Now, a sales day book is a list of sales invoices that have been processed during the month. It shows the net value and the VAT of each invoice. So this is the report. As you can see, it shows the customer to whom we issue invoices in the month of April, the details of each transaction of each invoice, the invoice amount, the invoice number, invoice date, the total amount of each invoice, the VAT element, and then the net amount of each invoice. You should download this report at the end of every month. It is extremely important. Download it from your Excel system, from your accounting system, and put it on your have a folder on your desktop, and then create and then file the report there for future reference. There is also purchase day book. There is also a purchase day book. Again, it's a mirror of the sales day book. It lists all the purchase invoices, suppliers invoices that have been processed during the month, showing the account name, the transaction description, invoice number, invoice date, total amount, VAT, and then the net amount. And then, of course, there is this VAT analysis report, which I have already shown you, which I showed you in my previous video, right? This VAT first analysis, it shows the total income for the month, again, which you have exported from the system onto your Excel for future reference. It shows all of those things like out of scope income, input VAT, that's input from purchase, or input charge to which your suppliers charge, VAT that your suppliers charge you, and the VAT that you charge your customers. Again, they need to be exported to the system. Then there is also another report that you need to prepare, which is known as nominal ledger reports. The nominal ledger report, which I can now again just show you what it looks like. Okay. Month-end report, nominal ledger report 20. Yeah. Now, it shows the nominal ledger report contains what they call audit trail. It's the audit trail of all ledger transactions during the month. Now, having exported the report to Excel, after exporting the report to Excel, create a folder for a whole year on your desktop, maybe year 2020, 21, and inside that folder, create a folder for each month, maybe April, May, June, July, right up to March 2021, and file the report for each month in the respective folder. Okay? This exercise of exporting to Excel is even more important if you are into what they call cloud computing. If you have what they call cloud computing arrangement, whereby your files are saved not on your premises but in cloud, in the cloud. You see, cloud computing or cloud arrangement has a lot of advantages, among which are: one, you do not have to invest in a server. You don't need to have your own server if you are into cloud computing. Okay, it's subscription based, and you don't need to have your own in-house IT team and so on, because everything is managed for you over there. Then you have what they call secure browser-based access. You have secure browser-based access to information wherever you are. You can even access your accounting information on your smartphone. Let's say you need the information about your financial performance and you are traveling on the train. And all you have to do is, browse, log in, and then your file will appear on your smartphone, and you take your decision while you are on the move. But then there are also disadvantages. You see, cloud computing depends entirely on internet connection. If there's a problem with internet, if you have a problem with your internet connection, then you will not have access to your data. But again, if you have been exporting transaction to your desktop almost, at the end of every month, then if anybody asks you questions, it could be your auditor, it could be your accountant. If you have external accountants, they will have information ready there, and you will not have to, just prepare accounts that are not based on anything and send them off to Inland Revenue and Companies House, I've seen that done somewhere, which is not, it's very unprofessional. Anyway, let me not go into that. Now, your licensing arrangement with cloud, with the service provider could come to an end. If your licensing arrangement ends and you have not been exporting your report and keeping them on your desktop, then of course, it will be bye-bye to all your transaction data, which will not be very good for your business. Okay? Now, having completed your download and everything, you then need to close the account, okay, for the month. Close the account for the month and then produce these reports. You have age debtors analysis. So one of them is age debtors analysis. Now, age debtors analysis, I'll show you what it looks like. Okay? The age debtors analysis shows you the name of each customer, the credit limit, how much the total value of sales to each customer in the reporting, so far, and the balance on each customer's account. It also shows you how long each balance has been outstanding. You can break them down into, say, like items that have been outstanding for less than 30 days, for between 30 days, over 30 days, and over 30 days and less than 60 days, and then for over 60 days. Yeah? When you have invoice items then in addition to the summary, you can also produce details. You see, the details will show you, actually indicate the invoice numbers for each outstanding balance, and then you'll be able to query. You see, let me just show you correctly. Now, you've seen all the summaries. Now, these are the details. Okay? Where the balance has been outstanding for a period that exceeds the payment term that you have given your customer, then you can pick up the phone or just send them a nicely worded letter to draw their attention to the fact that they have invoices outstanding. But then you also have to look at their credit limit. If they are within their credit limit, then of course you may not want to really rock the boat. For instance, this customer is still well within they are still well within their credit limit. They have not exceeded their credit limit, but that does not mean that you should let items remain outstanding for a very long time, because that will have a very serious impact on your cash flow. Now, when you produce something like this, if there is fake invoicing has been going on, then that is when, and the people who are engaged in the business of fake invoicing have not been clever enough to match it with fake payments, then the fake invoices will appear on the age debtors analysis, and then that will set your alarm bell ringing. Now, there is also age. In addition to producing age debtors analysis, you then have to produce a statement of account which you will send to your customers, those customers who have balances on their accounts. So, but this age debtors analysis, you can see the total that is outstanding on the customer's account. These totals, this report actually came from your sales ledger. Okay, you get it from your system, from the system, but it must agree with the nominal ledger balance. Okay, now this is your nominal ledger. Okay, this is the balance on the sales ledger. Sales ledger balance £16,463.62. Now this is the balance on the age debtors analysis. Okay, now at the same time, you also have this balance on the debtors control account, which is a summary of what is in your sales ledger. Okay, which is linked to your nominal ledger. Okay, this is the debtors control account in the nominal ledger. Okay, if I just take you through to the extended trial balance, you see that 1600 is the code. Yeah, debtors control account is £16,463 and 62 pence. Now, that is it for the age debtors analysis. Now, age creditors analysis is like the age debtors analysis in many ways. It's just that it talks about the opposite thing. The other, again, it shows the amount outstanding on each supplier's account and how long they've been outstanding for. Now, look at your credit limit for with each customer. Look at how much you owe those customers, each customer actually. See how long their invoices have been outstanding for. Do not let your suppliers' invoices remain outstanding beyond the payment term that they've given you, the number of days that they allow you to owe them money. If they give you a credit term, a credit period of 28 days, and you are letting their invoices outstanding for more than 30 days, then that will damage your business relationship with them. And even though they give you a very high credit limit, they may withdraw everything, and it will not be very nice. So you got to keep an eye on that. And it's also an opportunity to raise outstanding or disputed issues with your customers, your suppliers. They may have wrongly billed you, and then you can just drive a hard bargain and get the credit note back from them. Okay? Now, again, you should create a folder on your desktop and save all these reports there. So in addition to all of this, age debtors analysis, age creditors analysis, you must also produce a cash flow report. Now, what is a cash flow? A cash flow report is a tool for monitoring the company's cash position as a warning sign for when remedial actions need to be taken to bring your cash situation or cash balance to a desired position. So now I will show you the cash flow that I've prepared so that you have a rough idea of what it looks like. Here we go. Here is the cash flow for the month of April. As you can see, this is the cash at the top of the cash flow. You will see the receipt for the month from corporate customers, projected receipt from corporate customers, grant income, additional loan from directors, and from other customers, income from other customers. Now, this is the reality, and all of these I produce from the cash book. Okay? Now, you can also look at the expenses here. Okay, materials and so on and so on and so forth. Now, cash flow preparation is not just something you should put on Excel and then start dragging them all over the place, like up to month 12 or something like that. For you to be able to produce a meaningful cash flow report, these are the things that need to happen. All the direct payments and receipts which have appeared on the bank statement of the company must be posted to the cash book completely. Nothing must be left unposted. Okay? It is very, very important that you, the preparer of this cash flow report, is given access to budget details, especially income budgets. You need to know the payment terms that have been agreed with each income source. That is the likely payment date for sales invoices and grant. Now, look at the calculation here. Okay? Look at the calculation here. For me to produce this bank cash flow, and this is how it will happen in reality, you will know the supplier, the customers. Those are the people from whom money will be collected. Those are the people or the organizations that the company will be providing services to. You will know roughly when they will be paying. And the payment is likely to be, let's say, these are corporate customers. And they've assured the company that they will be bringing business to the company every month. So the payment from them is likely to come regularly. You can work out roughly, based on the information given you, you can work out roughly how much the income from each source will be. If it is grants, if your organization or department is grant funded, you need access to information about when each grant is likely to come in. Okay? Now, look at this. The payment terms agreed with each customer, corporate customer, is 21 days. 21 days within the date of service provision and within the days of issuing invoices. 21 days. They are allowed to owe the company 21 days. So, if your customer, okay, is allowed to owe you money for 21 days, you can then say, okay, if it means the invoice that I issued this month will not be paid, it's likely to be paid, it's not likely to be paid until next month. So that works out at 21 over 30, which means in the current month, if the payment time is 21 days, which means in the month that you issue the invoice, only 9 out of 30, 9 over 30% of the invoice will be paid on average, which works out at 30%. Then the remaining 21 over 30 days of the invoice will be paid the following month, which works out at 70%. So you can then say 70% of the income will be received in 30% of the income for the income made in each month will be received in the same month, and the remaining 70% will be received the following month. From that, you can do your projection to the end of the year. Say in total, up to the end of March, for instance, we will receive from our customer this much, and the payment due at the end of March, 70% of the payment due at the end of March 2021 will not be paid until April 2021. So that will be our projected month-end data. Okay? So every month, reality, what has actually happened, will replace your projection, which is why I've highlighted it. The month of April was part of the calculation before the projected calculation, but at the end of April, I went into the cash book and pulled out the actual number for the month of April, and that gave me this actual cash balance of 73.94 and 91. This balance must agree with the total month-end balance of all your cash account. Okay, the current account, deposit account, the petty cash account must give you that total, and I will show you that in a minute. Okay, if I open, right, okay, look at my current account balance. The current account balance is £2,094 and 95 pence. The deposit account is £5,000. And the petty cash is £3,000. That's £300. Now, I will show you, this is my draft balance sheet, which I will talk about later on. Okay? Look at the balances on the account. The balances on the account, all of this added together, gives me a total of £7,394 and 91 pence. Okay? And 91 pence, which is what I have shown as my closing cash book balance on the cash flow statement. This is very, very important. It is very, very important that they agree like that. There cannot be any difference between them. Otherwise, your figure will be totally unrealistic. Now, like I said before, for you to come up with meaningful figures, meaningful reports, meaningful cash flow, a cash flow statement that will make any sense to the management, it is very, very important that all postings, all transactions that are on the bank statement are posted completely to the cash book. Nothing that is sitting on the bank statement must be left there without being posted to the cash book. I mean, so you can't have a situation where several thousands of pounds of back payment to suppliers are left on the bank statement and not posted to the supplier's account, and by extension, the cash book. So in any normal environment where that kind of thing happens, that will be called willful neglect. Willful neglect. And it should be a serious disciplinary offense, as it renders the cash flow report, the cash book balance, age debtors analysis, and even all other reports totally meaningless. Okay? So it will prevent the organization's true cash position from being known with certainty. And where that kind of bad situation is tolerated or ignored, it is because the junior person responsible has a hold on those who are supposed to enforce discipline. Shall I say that junior person cannot be touched because he or she knows where the bodies are buried. So that is a real life, another real life problem that you are likely to encounter, and hopefully you'll be able to diplomatically resolve it in your favor. Now that brings me to the end of the video, and as I see you in my next video, when I will talk about final accounts and interpretation of final accounts. Thank you very much for watching. Please do comment, like, share, and subscribe, because I've got many more videos coming in, which I will make available later on. So watch this space. Take care. See you. Bye.